Hello traders, Nick Shaheen here looking at Roku, a fan favorite. I have history with this guy. I used to do a lot of videos on it. For some reason I haven't recently. So this is, I have to choose my words carefully here because it has a lot of fans and they're very passionate about it. So much so that one time, I swear to you, one time on a show I was on as a guest, I said that I was holding put spreads, and somebody got a hold of that thing and called me a short. And 2 years later, they came back at me on Twitter. 2 years later, so hey, I told you so. I just got the response the other day is from 2019. I don't even remember the engagement I had. So, but anyway, so I understand you love the stock. I'm here to tell you I'm agnostic. I don't have a trade on it. It just reported, and I'm helping out a friend. And he's getting into investing, and he's asking me if it's a good idea to buy the dip. And I'm thinking to myself, what dip? I don't even see it. In fact, if I do a weekly chart, I probably wouldn't see it at all. So it's my answer was to him, and I'll backtrack and tell you why I said that. First of all, I'm not bearish the stock. I'm only concerned about that guy's money, period. He's a dear friend of mine, and it would be like my mother coming to me and say, hey, I've got this pile of money, where do I invest? I'm not going to tell her Roku because of the simple statement, and here it is, okay? This up here is not an obvious investment point of entry. You get that part? It's not an obvious investment point of entry. That doesn't mean it's not going higher. That doesn't mean it can't make a triple or a quadruple or 10 times your money. It's just not an obvious entry point for somebody that wants to invest. Okay. Now, if I'm 15 years old and I have 50 years to recover from the mistake, maybe, right? But I'm not 15 years old, so it wouldn't be an investment. It is tradable, and I'll zero in a little bit. In fact, these orange lines are bullish trade setups. Okay. So there is some bullish stuff to say about it, and the easiest thing is the fact that the bulls are in charge of the action, meaning the dips are being bought. That's a fact, but not at every time frame. And I'm going to zero in on to the 30-minute time frame at somewhere in the middle of this video to show you what to look for in the next couple of days, really, because from a trading perspective, the investment, I'm not here to convince you to sell the stock or short it or anything. In fact, nothing here is an action, call to action on anything, just helping out a friend with levels, as if he's like a brother to me. So I want to try to steer him right on that one. So let's talk first general. So Roku has improved their metrics tremendously, but I still have beef with one of them. Okay, again, please take this the right way. They're growing their sales, they're growing their user base. I went to Benzinga Pro, and they increase year over year, especially from the average revenue per user. That's pretty much the bottom line, right? If you're growing users and you're growing your average revenue from them 24% a year, I think that's the math on it, $5 on 24. So there's no holes to pick on this one, right? Except that they're not profitable. Who cares? This is a growth company, right? So I judge it like a growth company. And guess what's the ultimate growth company that I know of? By ultimate, I mean doing it for 15 years almost, Amazon. So the one beef I have is this number right there, price to sales ratio. It's 40. It's 10 times more expensive than Amazon. 10 times. Not 1, 2, 3, 4. It's probably twice as expensive as Tesla. It's pretty high. How can I put this in English? So if I buy the shares today, if I buy the shares today at this price, I'm giving it credit for 40 years, almost 41 years worth of full year sales. Okay, 40 years of sales. So if you walk up to a business, say a pizza shop, and you say, I'd like to buy your business, I'm going to pay you 40 years of your total sales up front. Would you sell it? That's pretty expensive, right? This is not a pizza shop, but I'm comparing it to Amazon, which is a super fast grower, consistent grower, okay? So even if I compare it to other fast growers, it's still very expensive. So eventually, the business, the balance of price to sales has to normalize a little bit. And don't take my word for it. Look at it what it was before. So it was a great company then, right? Yeah. So it shouldn't get more expensive like this as it goes. Apple went from 3.5 to 7 point something. So Apple doubled too. So that's not great. But going from, let's average this 13, 12 to 40 is a big jump, and they will need to back it up. Okay, off with that, back to charts. What I like about charts is when they build a base and they break out from it, they come back and test it, and then they build a base, like Facebook used to do, which is like echelon rise, which is usually very healthy. So this is a weekly chart. See, look, there's no dip. It's still within the candle of last week. So higher highs, higher lows, and the week with 1 day to go. Today is, did I say that? Thursday, the 18. Okay, so let's look back to 2018. September, boom, they crashed. The market crashed. So this is not Roku's fault. The market crashed into the Christmas of 2018. Then Powell said, hey, I was just kidding. I'm not going to be raising rates. I'm going to be cutting rates. Whoop, straight back to where it failed, right? Failed a little bit and came back. And if you don't believe in charts, there's your proof right there. Cup and handle. The upside of the trade should be really this big, and that's what brought us up here. So the point is, broke out, came back and tested it. Yep, it's a solid floor. They came back to this failure, and then this is where the breakout happened. This is where the breakout happened, right? Boom. Well, there's no back testing. Maybe a mini one here. So if I were to pick a solid base, I would say 225-ish. But then the rest is just froth on froth on froth. By froth, I mean price action froth, not the company, please. I'm off the fundamentals now. Nothing against the company. So if you look at 1,000 charts, not one of them where this is an actual base for more upside. So that's what I mean by this is not an obvious point of an investment entry, especially 100%. So if I wanted to own 100 shares, I wouldn't buy 100 shares here. I wouldn't buy any for me. I should call, hey, I missed it. Let's catch it on a bad stint, not day. Because today it was it down? Barely. Okay, so back down to smaller time frames. Back to the daily. And now you can see how the dips are being bought. The ascending channel is in the hands of the bulls, right? So I'm going to go. I always hate it when I say that. This is a 2-hour chart. Still, there's a trend. The bulls are in charge. They're buying the dips. And the way it is, look, a little plateau here. They come back and test it. They go up. They try to touch back. So it's okay to come back halfway and not lose this ascending scallop, whatever it's called, inverted scallop or something. So right here, look, fail, struggle, breakout, testing. Here we go. We're testing. So now this is where it gets pretty tricky. Let's see, 60? Nope. 30? See, I'm zooming in, right? Making it smaller. So now it's a half hour. I have enough information on the half hour candle. So this is the neckline where we said we're testing, right? We have prior fails here. We have a breakout zone, and we're to come into testing. So what happens next is what's important, which is Friday and Monday. So this is how I decide to trade or not to trade. And now we're not talking investment, we're talking trading. So this was a floor to hold. This was the failure, the most recent failure, and some prior failure zone, right? So this by definition now is R, resistance, on the way up. Onus is on the bulls to take it out. And the problem is also this orange line. I didn't draw this. For this period of time, from January 28th until now, this is the heaviest volume area. So this is where buyers and sellers fought it out the hardest. So you can imagine if price approaches it, it's going to be sticky, because if there's an imbalance of sellers to buyers, so it'll be buy, sell, buy, sell. That's why it rallies. It hits a place where they're both going to be active, so it's buy, sell. It kind of like slows down a little bit. But it's not a wall. It's just this muck, you know. So it will fill the gap if it can, almost did, and then move on to see if it can slog through. If they can clear 485 or whatever that fail is, the two, wow, look how close together these things are, right? If then it's open sea, then the bears have nothing to short against. It's like open air. Oh, sorry about that. Wait, there we go. Okay, so now I know the battlefield. It's this guy, right? Within it, there are smaller time frames. There is an ascending, higher low, and a roof. So the action is pin, and then they either do this or this. So if they do this, they're going to try to hold it here. They're going to try to hold it here, and they better hold it here. Now, if they don't hold it here, we spoke about the upside, infinity, right? If they don't hold it here, now it looks like a wonky head and shoulders, almost like a bat, shoulder, a bat head, and then shoulder. And if they lose this, they could trigger a downside as big as this guy. That's what technicians told me. To me, I have an orange line here because I think there will be support here. This is an alert to tell me, hey, I have an alert here, because that means that the bears did their thing and they're overdoing it, and that'll be a place to get long again. Place to try to get long. Place to try to get long, but with tight stops, because if this is lost, that means I'm wrong. I need to get out as a long. Trading, not investing. So if it comes here, I say, you know what, I'm going to try to swing trade it with a tight stop, because if it gets to here, that means that's lost, maybe below this one. So this is the immediate plan of action. This is the box I'm watching. I've got trigger here. I've got trigger here. They're both, this is a bullish trigger, if you want to look at it, but it's also where the shorts will try to short it with a tight stop. So take your poison, just be honest about it. You can get more gritty and go to the 5 minute, but it looks pretty choppy. 10 minutes. Okay, so in 10 minutes you can get this line and that line, so you can get more. It all depends on the speed. I'm not that fast because I have the chat room going. By the way, you should check it out. It's total fun. It's not free because we do a lot of work. Today, we went long Palantir at the lowest part of the day, and I see it's up a couple of bucks after hours. That was a slam dunk long investment. That would be something I'd tell my friend and my mom. In fact, I just texted him. I said, Frankie, Palantir, I went long today. So anyway, Roku, I don't hate it. They're doing good things. Just know if you're trading it or you're investing in it, it's a different decision. At this point, it's not an investment entry idea for me, at least not for family. And as trading, I have actions. I can get busy with it in the next couple of days if I want to. Nothing here is a plan of action, by the way, to anybody out there. This is just my opinion on what is unfolding into the charts. And just remember that 80% of all the trading is done by machines. So if you're not studying charts, you are playing a game against opponents who are who have more tools than you and better equipped to make better decisions on the fly. So yeah, you're at a disadvantage. I mean, it's a good tool, and it's easy. I learned this on my own. I didn't use one bit of jargon. Maybe I said ascending scallop at one point because someone told me that's what they're called, not because I went and studied it. But it works. Oh, by the way, if you want to see it work, go to the IWM chart and see how each dip is exactly. See that? I put that today because that's the 50% fib dip. Okay, so actually, let me show you. It's pretty phenomenal. So I put that here because that's the 50% of this extension from this base to this top. Giving halfway is normal. Doesn't change anything, right? In fact, in this case, if it falls to 214, 215, it'll be fine. I will try to catch the dip here, even though I'm bearish markets right now. So that was the 1/5 fib, right? So how about this extension? Check out where the 50% is. Look at this. I can't make this stuff up, like to the penny. So tell me machines are not in control, and tell me that the technical analysis doesn't matter or is bunk, right? Like if you did an alert like this one down here and you bought the IWM, you made $26. $26, okay, in no time, really. So, oh, it's a fluke. It's a total fluke, right? Look at the 50%. Yeah, total fluke. If you set that alert and you bought it there, you made from here, what is that? Oh, up to, I can't see it. My eyeballs are going bonkers. Oh, to 221. So there you go, $30. So tell me it's a fluke. It's not. Machines rinse, repeat until the formula doesn't work anymore, then they bail. Nick signing out.